Hey everyone, Disney reported first quarter earnings results for fiscal year 2024 that has sent the stock price up about 7% in the aftermarket hours following the result of these earnings. Now, in this video, I'll review Disney's earnings highlights from the recent quarter and update my recommendation of Disney stock. Coming into this quarter, coming into this update, I had Disney stock rated as one of my top dividend stocks to buy in 2024. You're going to want to tune in to see if I'm keeping Disney stock on my list of top dividend stocks to buy or if I'm taking it down a notch. So let's jump into the results.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so revenue in the quarter were comparable to the prior year quarter at 23.5 billion, meaning revenue year over year was flat. No revenue growth for Disney, and there was forces offsetting each other. The linear network cable subscribers switching over to streaming and canceling each other out. Streaming segment delivering growth while the linear segment delivering year-over-year revenue declines. Investors are now getting a business that's more streaming focused and less exposed to the linear networks, as over the years more and more cable subscribers have switched over to streaming. Diluted earnings per share for the quarter increased to $1.04. That was up meaningfully from 70 cents in the prior year quarter. Remember, Disney said it will shed billions of dollars in costs over the year, and Disney has done better or shed even more costs than it told investors it would. It's shrinking its company, reducing costs, thereby delivering more profit on less revenue. Management saying we are achieving significant cost reductions across our businesses. We are on track to meet or exceed our $7.5 billion annualized savings target by the end of fiscal year 2024. That's great news for Disney stock investors. Bob Iger, as soon as he returned as CEO, identified several areas of cost reductions and has put on pace and started cutting costs. $7.5 billion annualized expense savings targeted by the end of 2024. I would not be surprised if the company exceeds that target. One area the company has focused on cutting costs is on content. Before Bob Iger returned, Disney had estimated an annual content budget in north of $33 billion. That has come down to roughly $27 billion. So a $6 billion decrease in content spending from Disney. And then that was even helped further by the strikes, which decreased the amount of production capabilities industry-wide. So that cut costs even more. All of that together has Disney expecting to deliver free cash flow in fiscal year 2024 of roughly $8 billion. That would be a meaningful improvement year over year. The company continues to expect to reach profitability at the combined streaming businesses in the fourth quarter of fiscal year 2024. The company said that they would achieve this around 2020 when they launched the streaming segment, although they did downgrade the forecast for how many streaming subscribers they would have by the end of 2024 from the initial forecast, but they maintained the profitability forecast. And as an investor, as a shareholder myself, I do own some Disney stock. I prefer the company to focus on profitability rather than to focus on subscriber growth. I've been especially pleased with Disney's focus on more profitable streaming subscribers. The previous management team was just focused on increasing the number of subscribers, and they were attracting millions of subscribers at a lower average revenue per user. When Bob Iger returned, he focused on higher average revenue per user. He started to cut content spending, at the same time increasing price for the Disney Plus streaming service, the Hulu streaming service, and the ESPN streaming service. So while that's not been great news for customers, it's been good news for investors. And industry-wide, that's been the trend started by the leader Netflix, which when Netflix started to feel competition entering the streaming industry, Netflix didn't react by cutting prices to try and keep customers or to try and take market share. Netflix continued increasing its prices, and the followers have followed suit. Disney, Hulu, ESPN Plus, Amazon now increasing prices, adding advertising, Peacock, Paramount, Warner Brothers, HBO Max, all of them have increased prices and for the most part reduced content budgets. So customers haven't been able to look around and say, oh, well, you're raising prices, Disney, so we're going to go to your competitor because they're not raising prices. Well, everyone's raising prices and everyone is cutting budgets. And so customers have not had much of a choice but to just stick with their streaming services and pay the price increases, although they have been complaining. If you've been reading message forums talking about streaming content, many customers are complaining about these price increases, yet they continue to pay because it's such a great value. For less than $30 a month, you can subscribe to several streaming services that gives you enough content to entertain you all month. There's so much content available on these streaming services. And so investors and customers still see great value in these streaming services, despite the fact that prices have been increasing. And I wouldn't be surprised if prices continue to increase across the board, industry wide, because it's still such a great value compared to what customers used to get with cable. And so that's what they're comparing to, and that's what they're switching from. And there's still room to increase prices. So this is good news for investors. I've recommended Disney as one of my top dividend stocks to buy, partly because of those favorable industry trends. I've also recommended Netflix as one of my top stocks to buy, again, partly because of those favorable industry trends. The streaming industry is one where I like the level of competition. It's like the opposite of what's happening in the electric vehicle industry. If you've been watching my videos on EVs, it's the total opposite, right? Competition is steaming, right? Price cuts everywhere. Everyone is trying to take market share by cutting prices. Everyone is increasing supply, spending more money on supply. That's an area I try to avoid. Whereas this type of scenario where everyone is cutting content spending and increasing prices, that's an area that's friendly for investors. That's an area I try to focus on. And that's why Disney and Netflix, for that matter, have been recommended as my top stocks to buy in 2024. So Disney expects Disney Plus core subscriber net additions of between 5.5 and 6 million and ongoing positive momentum in average revenue per user in the second quarter. In the current quarter, they lost 1.3 million Disney Plus core subscribers, while Hulu added 1.2 million. The reason why Disney Plus core subscribers decreased is because the company raised prices by $3 per user in the US in the latest quarter. And so, of course, some customers were going to leave because of that huge price increase, and content spending has been decreasing, as I mentioned earlier. So some customers are not deciding to pay, but overall, that's still a beneficial price increase for Disney, especially because now going forward, it expects 5.5 and 6 million subscribers to come back. So while the initial reaction may have been for customers to cancel, Disney has seen a reaction where customers are now joining back, or more customers are joining Disney Plus as they've looked around probably and shopped around and noticed that, the prices are pretty much the same everywhere and increasing everywhere. And so Disney Plus is a pretty good value. And so let's come back and let's subscribe. So in February 2024, the board of directors approved a new share repurchase program. The company plans to target $3 billion in repurchases in 2024. As I often say, when a management team puts out billions of dollars to buy back its stock, it demonstrates that they believe their stock is undervalued. And they're not just talking about the fact that they feel the stock is undervalued. They're going out and spending billions of dollars to buy the stock. Which is more convincing? Management teams that try to hype up their share price without spending any money on it? Or a management team that doesn't really talk so much about the share price, but then goes out and spends billions of dollars buying the stock? I find this more convincing that shares are undervalued and that management believes shares are undervalued, way more so than when I see CEOs going around talking about trying to hype up the quality of their business and the value of their business, right? If you really thought your business was valued or undervalued, you would be going out and buying it. And that's what Disney is doing here. And finally, Disney on February 7th, issued a cash dividend of 45 cents per share, which was a 50% increase versus the last dividend paid in January. This will be payable on July 25th, 2024. All around, very good news for Disney stock investors. Let me explain that a little bit further. Not everything was great news. Of course, linear networks continues to suffer. Cable subscribers are moving over, switching to streaming. But that part of Disney's business, everyone knows about that. That's been happening since 2016. Customers have been switching over to streaming. So that's been going as expected. But what's been good, what's been better than expected is the increase in the streaming segment, the increase in the parks segment. Everything else is going very well. Profitability is expanding. Cash flow from operations is expanding. All of that is expanding at a meaningful rate. So that's been good news for investors, despite that headwind from cable subscribers switching over to streaming. So all that said, I still think Disney is a top stock to buy for 2024, or my top in my list of top dividend stocks to buy for 2024. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.